Welcome back guys, Harry here, known as Tradesharpe, and in today's video we're going to look at managing trades. So have you ever jumped into a trade and then felt like, hey, I didn't have to take that full loss, I could have managed the trade, got out, maybe looked for a better entry? We're going to discuss exactly that. This is an advanced skill, and this is also going to tie into stop loss placement, because we normally place stop losses where we are wrong. So is there a way to manage? Because there's also a problem of over managing, where people tend to close out too early, close out too late, and I'm going to show you exactly in this video how not to over manage, how to make sure that when you enter a trade you have a full plan of when you're going to exit, and talk about that in this video. So I hope you find it useful, and yeah, let's get into it. Alright guys, so before we start talking about managing trades, you know the drill. Can we do the YouTube business? Would greatly appreciate it. Leaving a subscribe, leaving a like if you enjoy the content definitely helps. I love to read the comments, so leave them down below. Below is my official links, so you can join the free Discord. Anyone who DMs you is not me, obviously. And yeah, you know, be part of that community. Plenty of resources in there, and only my official links are down below. Follow me on Instagram, posting a lot of content and updates there, so you can keep updated. And yeah, that's basically the YouTube business. You know the drill. Definitely supports the channel if you like this content. Try to put out what I experience in the markets and share my experiences. So all of that BS out of the way, let's get into the juicy stuff you're here for. Alright, so when it comes to managing trades, many people think about this wrong. So there's a reason why we have a stop loss, and that's because that's where we are wrong. Our stop loss is not to protect our equity, that it comes to risk management, right? Risk management is protecting your equity. A stop loss, the reason it's there is because it is where we are wrong in the trade and we want to be out. Think about it like that. The second thing is, too many people focus on, I need to put my stop here, where am I wrong? Focus on where you're right in the trade. Your job as a trader is to be right most of the time. You should have a strategy that is right most of the time, or be learning one or working towards one. And in order to do so, you should be thinking, what am I going to do when price reaches this point? What am I going to do when price reaches that point when you're in profit? It's harder to manage a trade in profit than it is in loss, because in loss you're wrong, but in profit you're always right, no matter when you close, right? Because even if you close 5 pips in profit, it's still a winning trade. Was it good? Maybe not. You could have got more. When you close 10 pips in profit, was that good? Yes, maybe that was your target. Maybe that's made sense. When you close 50 pips in profit, was that good? Maybe no. Today you got lucky, because that's not going to happen every single day, because price just pushed crazy today, and next time you do that, you're going to keep hitting break even or keep hitting SL, because you're trying to hold your trades too long because you have no plan. So people don't think about that. And that was especially my problem when I first started, is that I was not thinking about how to manage a trade in profit when I'm going to close, because that's more important. Because if you start, you know, thinking about, okay, I'm going to close a trade too early, or you close a trade too late because you're greedy, that greed makes you feel like you did an amazing job, because today you've been able to, you know, make a lot. You made 80, 90, 100 pips, and you're like, that's amazing. You feel great, but you don't look at it and think subjectively and think, hey, actually, that's not a good idea, because long term, we don't get those type of pushes on this type of setup. I should be focusing on where I should be exiting, because it's a long-term game, right? So we want consistency over time. So there's two places where we put stop losses, right? And that's the first thing we need to understand. Where do we put stop losses? So we either have stop loss below a candle, right? That's my beautiful drawing of a candle. Or we have stop loss below a structure, right? So your SL will either be below a candle or below a structure or zone, whatever you want to call it. There's no other place you can put stop losses, right? It's either going to be below a candle or below a zone. So let me just draw like this, make this, let's say this was a whole zone. So you can either have it below structure, below a whole zone, or below a candle, or above a candle if you're looking for shorts. But let's say in this example, we're looking for buys. These are the only places you can have a stop loss, right? It's either going to be below a candle, below a zone, and or above, right? Now, when do we use below structure? When do we use below a zone? Now, this is of course going to be more of a stop loss placement video, which I have made, and I will make more of an advanced one to go more into depth. But to easily cover it, the reason why we use below a candle is, let's say we're using 15-minute, 30-minute, and we're trading a setup that relies on volume. Since I trade price action, when price breaks out of a zone, or price has created a support for me to trade to a target, I expect price to do what? Let's say I'm looking for buys. I expect price to break highs and respect lows. So that is when I'll utilize the candle. And if that candle is big enough, meaning it's giving me enough range, I don't expect that candle to come down and break its own low before continuing up, because you expect volume to continue in your direction. Now, in a similar case, right, if we're taking a breakout out of a, or not a breakout, but let's say we're taking a break of a zone here, that candle that we're going to take our entry like this probably has broken above a zone, right? We probably have here on the left, based on the way I trade, right? I probably have had a previous resistance. So I can rely on that resistance also to be my structure in my trade. So technically my stop loss is back inside of the range, but I use the candle low because, again, when price is moving up, what do I expect it to do? Break highs and respect lows, right? So on the other case, when we don't have, and we're trading, maybe from a support zone, right? Let's say we're trading from a support zone. That is when we can use stops below structure, right? Let's say we're trading from, let's say we take this type of trade here where price, breaks above the structure, and we are going to use, which is similarly the low of the candle, but we're going to put it below the structure here, right? We're going to put it below the structure here. Why? Because that is where we are wrong, right? These SL placements is where we are wrong in the trade. Okay, so we will be wrong if price breaks out or breaks above the resistance, comes back, breaks the low, and breaks back structure. That's where I want to be wrong. Now, most people, right, you could run the approach, even, taking trades where most people just put stops below the whole range like this, but we don't have to. And this is what happens when you develop a strategy, is that you want to try get, you don't want to be running 84 pip stops here. You want to run stops as tight as possible, because that's going to give you the best. I don't believe in risk to reward, because target what the market gives you, but it's going to give you better risk management because you can risk more with the smaller stops. That's just facts. The smaller the stops, the more you can risk if your target's bigger, because that's where you're wrong. So if we can find and pinpoint exactly where we're wrong, then that's why we're going to keep stops there. So management only becomes a factor when you are trading with a bigger stop loss, because then it gives you more room to manage. If you're going with the approach that you need to be in a tight spot to manage, then you are wrong where you are wrong, right? And this is why I don't completely agree with management, because why put the stop in the first place, right? So there's only a few specific times when we can manage a trade, right? And that is the only times that I utilize it. So when I started trading, I used to be all for management. Like, if this happens, I'm going to manage the trade. If that happens, I'm going to manage the trade. But then in reality, when you look at it, you're like, no, I put my stop loss there for a reason, and that is why I'm not going to manage it. So let's go have a look at the only examples when I do manage a trade. Would be something, let's go and find an example here. All right, so here's an example of where I probably look to manage a trade if I had a scenario like this. So this is where, let's say I would take a short position on the basis that price is closed below this certain zone here. My stop would go above this structure right here, something like this, right? That's where I would keep my stop loss, above this structure, because I know if price breaking back into the range, then I'm probably wrong. So if I kept my stop something like this, above this wick here, and we're going to take this position. If I see price go into profit, and it starts to tap into these zones down here, okay? Now, normally I move break even. That's one way to manage a trade. So whenever price reach a target before my TP, let's say my TP was all the way down here, or let's say my max TP was somewhere down here, 28 pips. If price taps into a zone first, and I start to see rejection, that's when I move break even. So that's the best way to manage a trade, is manage it at break even. What does the market tell you? If you've reached a zone and price is rejecting it, don't be greedy, right? If it's rejecting the zone, it's going to be 50-50. So if your idea is to push past that zone with volume, then that is when you expect it to do so. And if it doesn't, then don't sit in a losing trade. Don't try fight the market because you feel you're right. Look what the market is telling you. If the market's rejecting from a zone before your TP, there's no harm at being at break even and waiting for a better opportunity. Maybe your trading zone wasn't good enough that you didn't have enough room to hit TP. Okay, so this is a very easy way that you can manage your trade like that. But obviously this example here, which is what I want to show you, is that when you have volume in the market, it'll push through the zone and hit TP. But this won't be a bad spot to be at break even. So that's one way to manage. The second way I can say is, let's say it rejects off nothing, right? Let's say this was all clean here and it just starts coming back. Obviously, there's no sign of why price is rejecting. And I can say, okay, if I'm wrong here, because you expect volume to continue in your direction, whenever you think to manage a trade, you have to have a re-entry plan. That's my rule. So whenever you decide to get out a trade early, you need to have a re-entry plan. So if I'm expecting volume to continue price down here, the only time I would exit the trade early is if I see something that makes the trade not make sense. So we've been going down the whole day. It's been respecting structure. We've closed below the zone. If I see a candle go against me, and close back above this structure, I consider that a fake out, and I'm happy to go out and save myself on 5 pips, because that type of scenario replicated over time, 5 pips will save you a lot, right? So if you can save 5 pips a lot, it's going to be, pretty useful. But that's the only time I'd look to manage. Otherwise, as long as it does this, whatever it wants to do, I trust the position and I trust it to hit my TP, because that's your strategy. If you put your stop loss there in the first place, rely on probabilities, rely on statistics in order for your trade to play out, and only have a management plan when to move break even. And that is mainly when we hit structure before a certain zone. And then there's more advanced techniques as to experience of, certain session pushes, average session push, and all that stuff. But the next part I want to speak about here, which is more important, is how to manage a trade in profit. Now, this is the number one thing you guys should be concentrating on, because that is the goal. That's where we want to be. I focus on my trades in profit because that is exactly what I'm looking at. You have to look at what you want to happen, and you want your trades to go in profit, and you want to maximize your profit. So how do you manage a trade in profit? So the first thing is, and this is why I don't agree with risk to reward, if there's a resistance, and let's say your stop loss is 15 pips and there's a resistance at 14 pips, that's still 14 pips plus, right? If your strategy works out most of the time, that's worth the risk, even though it's negative risk to reward. Because if there's a resistance at 14 pips, you don't just say, I'm not sitting out because it's not a 1 to 2. Who gives a crap? You still miss out on 14 pips, right? Take what the market gives you. And that's another thing. Don't be greedy. Look what the market's saying. How are we going to close a trade? There's only 2 ways to close a trade in this market. The number one way to close a trade is when we reach a target, which is either going to be a zone, which is going to be a resistance / support, or it's going to be a monetary target, right? Those are the 2 things. Now, this one is a very dangerous one because people implement greed here, right? So the only time you use a monetary target is that if you reach a certain level where your trade is played out, you're happy with where it is, there's no resistance, but you're happy with the profits and want to get on with your day. So you're closing earlier than your TP, but not too early to manage your trade, because then you're over managing it, right? You're not closing 3-4 pips in profit. Say you had a 15 pip stop, you're up 16 pips, and you're like, you know what, I'm happy. It's been a good push. It's happened quick. I'm just going to close out, right? The second time, you're managing at a certain zone. So when you take a trade, whatever trade you take, whatever time frame you take the trade on is where your target should be. That is where your initial target should be on the time frame you take the trade. Taking a trade on 1 minute, your target should be on 1 minute. Don't recommend to trade 1 minute. But let's take my example of using a 15 minute. My target is going to be on 15 minute, right? My runner target or my second TP or something to, treat a runner as a second position. I have a video on that, but that is going to be on higher time frames. But my actual target for the trade is going to be on the time frame I take the trade. So when I reach that target, that is when I should be closing. So the only reason I hold past my target is when I use like a 1 minute squeeze technique, which is a technique I have in order that if price just has a lot of volume today, I'm going to let that run. And I'm going to tell myself if it comes back below my target, I'm out. So both ways I'm out at my target. But if I get a little bit more, hey, that's free extra income, and I'm never going to say no to that. So focus on managing your trades in profit. What levels are you going to move to break even? Very important to move to break even, because you can avoid a lot of drawdown, a lot of losing trades by moving to break even at the right levels. Because if price rejects a level, that's rejection, right? If you're looking for price to do continuation and price is showing you rejection and it doesn't make sense to go up or down anymore, then you shouldn't be in the trade. But if it still makes sense, the number one thing is understanding and having the knowledge. Managing trades is a complex thing because it leads to over management. So to sum up everything and make it very, very simple, trust in your position. Follow a strategy that works. You can look what I do. Follow the stop loss idea, follow the TP idea, and trust in that. Let probabilities do the work. The only time you should trust the trade, the only time you should touch the trade is when you're looking to close, or you're moving to break even, because at that point it made sense to move to break even, because it doesn't make sense to lose this position at that certain point due to there being a resistance or whatever, or a support that we're tapping and could potentially reject right before your TP. That is the only times you should be managing the trade. The rest, let probabilities do the work, enjoy it, and hit those TPs, because that is the goal, right? Focus on your trade and profit. Don't, be greedy. Don't close early, especially, and this is number one before we end. If you're holding a trade and it's taking time and it suddenly goes back in profit, don't be like, finally it's in profit, I'm out. No, trust it, right? Because at some point you thought it was going to hit stop loss, and that's the worst case scenario. You put it there because you were wrong at that point. So don't over manage your trade. Focus on probabilities, focus on good TP placement, focus on good SL placement, and then let the rest do the work and let those trades reach into profit and look to manage them in profit. So that being said, guys, hope you guys enjoyed the video. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.